guys, and welcome to your market report for this Wednesday, March 6, 2019. Listen, I'm really glad to have you guys here. Let's get started. Let's open up the charts right here, and let's take a look at something. First thing I want to take a look at is, I'm sorry that the page is kind of like the way it is. They're putting these huge, humongous ads on Zero Hedge right now. On Zero Hedge. The Bank of International Settlement warns of market crash risk. Looming fire sale once BBB downgraded avalanche begins. Well, here's the thing. These corporate bonds, there's $6.4 trillion worth of them. And these are like, this is like the junk bond market. You got these investors that go into the bank, And what happens is they sit down with the financial analyst or whatever at the bank and say they got $30,000 extra money. They've worked hard or whatever at their business, and they got $30,000 worth of extra money to invest. And they invite them into the back room at the bank, and to sit down with a money manager and an investment analyst, or and all this kind of stuff. They'll say, and they recommend. They say, I recommend you go into high yield. That's what the investment manager says. I recommend you go into high yield. You can make a better rate of return and all this kind of stuff, And oh, yes, it's very safe. It's very safe, And a great safe place to put your money, and you'll make more money and off of your money and all this stuff. And they pat them on the back and they say, okay, put the $30,000 into high yield or whatever, What they don't realize is, they're going to be investing in this corporate bond market, in what's going on here with this junk bonds. And here's the thing. Now it says, and now it's the turn of central banks and the central bank of central banks, the Bank of International Settlements, to join the bandwagon, warning that the surging supply of corporate debt in the riskiest BBB investment grade category has left markets vulnerable to a crash once economic weakness triggers a bout of rating downgrades and sends over $1 trillion of bonds right into junk bond purgatory. And they talk about here how once this starts, it says, the Bank of International Settlements, I'll read you right here, boils down to this: a wave of downgrades would result in a liquidation fire sale, as all those who held on to hundreds of billions in IG debt are suddenly forced to liquidate, potentially resulting in a bidless market. So, the guy goes into the back room in the bank. They invest his $30,000 that he worked hard for in the junk bond market. They don't tell him, we're investing your money in junk bonds. They tell him, we're investing your money in high yield, right? And that sounds good to him. Oh, yeah, that's great. High yield. Oh, that's what I want, high yield. They don't tell him junk bonds. If he hears the word junk, he'd walk right out the door, right? But here's the thing. Where's his money going? The Bank of International Settlements has said that very soon, what could happen if the world goes into a downturn and there's a wave of downgrades on these, they're suddenly going to be forced to liquidate, potentially resulting in a bidless market. So can we say to the guy, goodbye to your $30,000 you worked so hard for? A liquidation potentially resulting in a bidless market. Let's get on with the market report today, and let's take a look at what's going on. Let's start with cryptos. They ridicule cryptos and everything, but cryptos is actually, over the last few days, been doing better than gold and silver. Cryptos is hanging on to its basically $132 billion market cap with 51.8% Bitcoin dominance. And we see some large movements up in these coins, especially Litecoin. Litecoin just topped $53.56. And that's one of my favorite cryptos. Litecoin is capable of roughly I think it's 56 transactions per second, right? Or Bitcoin is only capable of 7. Plus, utilizing the Lightning Network, it's capable of unlimited amounts of transactions, and so is Bitcoin. But the Lightning Network is slowly but very slowly trudging along and becoming established. Now you have coins like EOS, which is capable of, I think it's over 1,000 transactions per second. EOS is one of your faster coins. And, you know, let's not forget XRP. I think it's like 1,600 transactions a second for XRP. It's really up there, you know. It's more transactions per second, I think, than, what's the other company? PayPal, is it? Anyway, very fast, you know. It's capable of a lot. And so we have Ethereum. Ethereum's not capable of that many transactions per second. I think it's like, if I remember right, it was 30 or something, and Bitcoin's like 7. You know, Bitcoin is a slow one, but Bitcoin's not going to need all those transactions per second, because Bitcoin is not going to, in the final result, I think what's going to happen is Bitcoin's not going to be moving that much, and nobody's going to be using it to buy anything with. And the reason why is because why would you want to spend the stuff if the price is constantly going up year after year after year? At a certain point, people are going to catch on, and they're going to say, hey, you know what? I'm going to buy Bitcoin, but I'm not going to spend it. And that's what everybody on Earth starts to do the same thing. You know, you'll see transaction rates drop on the network because nobody's spending it. Only a fool would spend it. You know, if you got something that's year over year, endlessly, constantly going up in price, okay, yeah, it does do these bull markets where it surges up to a new high, but then it falls back down again. It falls back down, but it never falls back down to the price it was before it surged up. If it just keeps constantly doing that, after a while, investors are going to start to catch on. They're going to say, hey, you know what? We're going to buy this stuff, we're going to put it away, and we're never going to spend it. We're going to wait until it's worth 10 million or 100 million or whatever. You know, and nobody's going to spend the stuff. So maybe it'll never be used as a currency, because nobody in their right mind might ever be willing to use it as a currency. They're all going to hoard it. So some of these other currencies, some of these other cryptocurrencies might actually become currencies. Litecoin might enjoy the same fate as Bitcoin, ultimately, in the end, but currencies like EOS and XRP and stuff, some of these other ones might be actually used as currencies, you know, but their price might not go into these exceedingly high levels, you know. Well, that's what I think possibly could happen. Let's take a look now at Bitcoin's price range today. It's 38.45. Says here 38.47. Okay, 38.47. And if we pull back here, we can see it's been staying pretty strong, you know, at these prices. But what we're looking at is if we go back to the 12 hour here, we can see that. Let's go back to the 1 day chart. Let's try a 3 day. Okay, here the 3 day, you got it for sure. And we'll hone in a little bit at its drop. And we can see it's just constantly dropped down, and now it's found this level. But we're still in the bear market. Until it starts to surge up above, say $6,000, then we can say, hey, you know what, maybe we're coming out of this bear market. Let's take a look at the Dow today. Now, actually, this is oil. It's down 39 cents on the day. You know, we had this, ever since December, we had this bit of I'm not really going to call it a bull market, but oil has been pulling up out of its slump, and now it seems like it's starting to roll over a little bit again, to tell you the truth. It's this chart here, when you look at this long-term chart, you can see that she's starting to roll over a little bit, and she's down 39 cents on the day. Take a look at silver. Silver is at rock bottom right now. Rock bottom. I would call it rock bottom. You know, and they've smooshed this thing down for so long that I'm almost to the opinion that they can continue to smoosh this thing down as long as they can continue to print those fake paper silver and fake gold. You know, they really do have a lot of control over this market. It's amazing. Here is the live gold price, $12.86. You know, though, silver could get away from them, and I'll tell you how it could get away. If we get some sort of a shock in the world to the markets, like say the stock market were to collapse or something like that, you know, some event were to happen, say Deutsche Bank were to go under or whatever, there might be an exodus into the precious metals. And they're going to want physical. And if they don't have enough physical silver in their inventories to meet demand, there could be a failure to deliver. Now, an awful lot of guys, analysts out there, they look at the total amount of silver in the world, and they say, oh, huge silver inventories in the world. We can never have a shortage. What they're missing is something that's so simple, is the fact that most of that silver is not for sale. If it's not for sale, you can't count that as saleable silver. How much silver do they really have that they can deliver tomorrow morning that they're willing to sell us? That number's very small. And if we get a huge demand come in for silver, for coin and bar demand, if it goes up to Crazyville by some event that happens in the world, it could eat up most of their available stocks that are available for sale. And then if some huge guy comes into the market that really wants a lot, a whale comes in, wants to buy up a lot, suddenly there could be a failure to deliver, which would create a panic, especially amongst companies and stuff who need the stuff to make things like cell phones and stuff. They would panic buy at that point. You know, the price could shoot up. The price at that point would shoot up to until it hits a price level where all of these inventories that are not available for sale suddenly become available for sale, and then all of a sudden the shortage would end. But how high would that price go on silver if there was a shortage or a failure to deliver? Well, it's difficult to say how high that price would go, but I guarantee you it certainly wouldn't be no $15 an ounce. Pre-market data on the Dow Jones today. We're down 44 points on the Dow today. Of course, the markets haven't quite opened yet. They're not open for another hour and a half, but we're down 48 points on the day on the Dow. Bonds and rates, you know, we see that the bond yields are falling again now. And that means that investors are really scared. It's funny, you know, they're really running into bonds. There's inflows of capital coming in right now, and they're buying bonds. And they're scared. They're buying them as a safe haven asset. And they perceive trouble coming, and they're buying quite heavily on the short end, you know, because they don't want to get trapped in the bond for too long a length of time, you know. And so it's inverted the yield curve a little bit. Well, today it looks like the yield curve's not inverted, but it's been inverted between the 2-year and the 5-year, you know, quite consistently. The yield curve inversion, not a full-scale yield curve inversion yet, but it's like getting there. I mean, we're going to have to watch the bond market very closely, you know, and we do here on this channel. We're looking at the U.S. dollar index today, 96.90, and it's just going along sideways, bouncing up and down, but it's going along sideways. So listen, thank you guys for listening to this market report. Like and subscribe, and we'll catch you again very soon. Bye-bye, guys.